Hey, tech aficionados, welcome to the Tuesday edition of the Tech Stocks Daily Podcast. Today, we're strapping in for a thrilling ride with Uber as it races towards an autonomous future, expanding its retail delivery services with big names like Pony.ai and Family Dollar. Then flap your wings with Duolingo, soaring high on bullish analyst reviews and projecting massive global growth. And don't miss out on HP's upcoming financial reveal. Get ready for an exciting insight into one of the tech domain's most seasoned players. So, grab your earbuds and stay tuned for a packed episode that breaks down the strategies driving stock movements and innovation. Buckle up, tech enthusiasts, because today we've got a thrilling ride through the latest developments with Uber Technologies. Uber has been speeding down the road of innovation, merging clean with cool, and setting the pace for autonomous driving tech while expanding its retail delivery strategy. So, let's put Uber in the spotlight. This Tuesday, Uber's stock saw a slight upward tick, fueled by a plethora of juicy updates indicating a big push into the world of autonomous vehicles and retail delivery expansions. First up, Uber has signed a noteworthy agreement with none other than Pony.ai. Yes, those tech wizards crafting robo-taxis. Pony.ai's 7th-generation autonomous technology will soon be cruising onto the Uber platform. Kicking off in a Middle Eastern market, this service will embark on its journey later in the year with a human safety operator riding shotgun. Uber and Pony.ai aim to transition to full autonomy eventually, but keep your hats on. No timeline for that transition has rolled off the assembly line yet. This strategic maneuver is all about Uber integrating driverless technologies more expediently into its platform. With this partnership, Uber is pressing fast forward towards its goal of enhanced autonomy. The robotaxis will leverage Pony.ai's robust system, ensuring scalable production without burning a hole in Uber's pockets, or yours. Switching gears, let's not forget Uber's expansion in the delivery sector. They have also hooked up with Family Dollar, kind of like the retail therapy version of a buddy cop drama. More than 5,000 Family Dollar stores across the US will now be available on the Uber Eats app. Say hello to late-night snack runs and on-the-fly furnishing orders from the comfort of your couch. With this deal, Uber is expanding its retail delivery footprint, making low-cost essentials more accessible to those who need them. It's perfectly timed as consumer focus shifts increasingly toward both economic options and convenience, a savvy move by Uber in today's market climate. And Uber isn't stopping there. They've also upped the ante with WeRide, another autonomous driving pioneer, rolling out autonomous ride services to an ambitiously planned 15 more cities around the globe. While Abu Dhabi and Dubai are already in the rotation, this rollout seems to shy away from the US and China markets, focusing instead on those untapped international markets that are just longing for some self-driving TLC. So what does this all mean for Uber's bottom line, you ask? Well, with shares hovering at around 85.80, tiny fluctuations aren't sending anyone leaping out of their seats just yet. But with Uber's aggressive stride into the realms of autonomous innovation and retail, it's like watching the next blockbusters unfold. The moves echo readiness and resilience against competitive winds, shaping up to be money well, wheels spent. An outright drive to fuel efficiency, biggest checkberg for many cities' public-private partners each day. Ahoy, tech enthusiasts! Today we're diving into the language learning waters, where our pal Duolingo is making quite the splash. This isn't your typical sitcom classroom cringe fest, but where Duolingo, the vibrant owl, hoots in several languages as a multi-talented tech star on the NASDAQ stage. Kicking things off, Duolingo, listed under ticker NASDAQ CAC DUOL, is glowing in the spotlight thanks to a confidence booster from JP Morgan. Analyst Brian M. Smilek is waving the green flag, reiterating an overweight rating. He's whispering sweet nothings about Duolingo's potential to scale user growth year after year like a pro escalator. With a price forecast soaring to $500, you'd think we're talking about a first-class plane ticket, but nope. It's just one rocking app that's lingo-tastic. JP Morgan's optimism stems from Duolingo's colorful, expanding user base, boasting 130 million active chatterboxes a month. But hold your party hats, because this only scratches the surface, with just 18% of global online learners on board. Smilek sees a golden opportunity to broaden languages, sharpen teaching chops, and march ahead in underexplored lands. It's a cross-continental owl flight ready to happen. But there's more. Earnings are getting tickles too. Tapping into the power of the almighty Zacks rank, Duolingo finds itself crowned with a praiseworthy position. This rank, by the way, flaunts a record of bringing returns so high it might just need a parachute. With the gauge pointing upward towards eyelash-fluttering earnings estimates, Duolingo is climbing the data charts. Analysts are collectively boosting forecast figures, hopeful that this will catapult stock prices to new heights, not unlike your language skills after a few binge sessions on the app. Add the swirl of momentum to the mix, and Duolingo is quite the roller coaster in motion. According to the Zacks Momentum Style Score, this is one classy momentum-filled ride, up 27.39% over the past week, and displaying record dexterity when set alongside industry benchmarks. This owl doesn't just climb, it takes flight. Duolingo's ascent is backed by more than flaps and feathers. The company's strides in broadening its courses, upping conversion rates into paying customers, and improving monetization have investment tongues wagging. Think Dollaringo as much as Duolingo. Overall, Duolingo is like that overachieving student we all secretly wanted to be, combining strategy, trend-following intelligence, and that extra mile to stand out from the class full of stocks. So there you have it. With financial analysts rallying behind, students worldwide embracing its charms, and the collective hope for even shinier earnings, Duolingo's journey is one riveting plot twist after another. Cheers to the language revolution. May your vocabulary and portfolio both grow ever richer. Today, we zoom into the tech radar and lock onto HP Inc., or as the stock market aficionados might know it, NYSE HPQ. The corporation behind countless printers and offices and homes worldwide grabs some attention today, not for any flashy gadget unveiling or groundbreaking technology, but because they're rolling in the financial news circle. So what's the deal? HP announced that it will reveal its second quarter fiscal year 2025 earnings on May 28, 2025. Mark your calendars if you're the kind of techie who knows their EBITDA from their earnings per share, or if you simply love dissecting quarterly reports over a hot cup of joe. The earnings call will be hosted via a live audio webcast, starting at 5 p.m. ET or 2 p.m. PT, depending on which side of the continental divide you're tuning in from. Why should you care, you might ask? For HP, a stalwart in personal computing and printing solutions, delivering a compelling financial update can have implications that ripple across the tech pond. When one of the more venerable tech giants reports its earnings, analysts, investors, and tech enthusiasts turn a keen eye towards their performance. How are they faring in sustainable devices and services, and what moves are they making in hybrid workspaces and gaming sectors? So, if either you're a diehard HP loyalist or someone with a financial stake, this earnings call will offer insights into their strategic maneuvers and future focuses. But even if you're just tuned in to see how big players like HP stand in an increasingly interconnected, tech-savvy world, the chatter from this announcement will certainly fuel the blogs, tweets, and tech discussions in the coming weeks. This communication included the necessary formalities and legal jargon about warranties, apples and oranges comparisons, and a cautionary note about technical errors, delivered with all the warmth of a command prompt tutorial, but necessary nonetheless. And here's where it gets interactive. What are your thoughts, tech fans? Do you think HP will hit it out of the park with its earnings, or are storm clouds brewing on the horizon? Perhaps you believe HP should redirect more focus towards its booming sectors, like 3D printing or gaming. Let me know your predictions, musings, and all your tech-tinged thoughts in the comments. I'd love to hear how the HP constellation aligns in your tech universe. Hit the comments below. All right, tech trailblazers, let's zoom in on Duolingo. The language-loving owl is hooting with joy this week thanks to strong investment bullishness from prominent analysts like Brian M. Smilek at JP Morgan. With the overweight rating and a price forecast aiming skyward to $500, Duolingo is certainly riding some high winds right now. So, would I personally buy, sell, or hold Duolingo at this moment? Based on the sparkling news and analyst confidence, I'd lean towards a buy. Here's why. Duolingo's rapidly expanding user base, 130 million active users and growing, signals a solid market presence. With markets still largely untapped globally, Duolingo is eyeing continual growth, akin to an escalator that's just hit its prime speed. Plus, their innovation extends beyond the app, potentially turning those free users into paying subscribers faster than Artemis lands back on the moon. That said, momentum is alongside them, with their stock recently surging by over 27% in a week, putting it ahead of industry benchmarks. This indicates not just current strength, but the potential for sustained investment allure as they refine monetization strategies, enhance course offerings, and reach fresh audiences eager for a slice of bilingual pie. However, the usual advisory notes pop up here. Stocks can be as unpredictable as autocorrect errors and passionate WhatsApp debates, so do your own due diligence. Understand your risk appetite, fit Duolingo within your investment strategy baseline, and stay informed via trusted sources before hopping on the buy-side bandwagon. So there you have it, a feathered friend potentially worth chatting with. But remember, in finance, much like learning languages, preparation and homework make all the difference. Happy investing, savvy tech fans. Wow, what a day in the tech world. From Uber racing toward a future filled with autonomous vehicles and delivery deals, to Duolingo flying high on bullish reviews, and HP preparing to drop the financial mic with their upcoming earnings. Each of these tech titans is navigating the NASDAQ scene with their unique strategies. Uber is steering its wheels towards the autonomous future, expanding its reach beyond ride-sharing into retail deliveries. Duolingo, meanwhile, is capitalizing on its ever-growing global user base, soaring on a NASDAQ high. Meanwhile, our dependable friend HP is gearing up for its financial spotlight moment with the second quarter earnings reveal. As the tech landscape continuously evolves, these stories highlight the dynamic strategies companies are employing to drive growth and innovation. Don't forget to show some love by hitting that like button, subscribe if you're new here, and share it with your fellow tech enthusiasts. And come back tomorrow for more tech tidbits that keep you ahead of the game.